All right, the British Parliament officially voting this week to give Prime Minister Theresa May the power to ditch the European Union. Now Europe's top central bank leaders are all at odds over how much this is going to impact the financial stability of Europe in the long term.
We're back with Bob Diamond. You know, Bob, obviously you spent some time over in London as CEO of Barclays. What do you make of the whole Brexit situation as far as, are you surprised that it hasn't had more of an impact around the world in terms of asset prices?
Yeah, actually I am, and you know, love the fact that I can vote in the UK as well as the US. Our family was there long enough that we have passports in the UK as well as the US, and I voted to remain, so I was wrong. I didn't see some of the underlying things that were going on in terms of that election, but I also have to say it's been much more calm post that decision than I would have expected. I do think the financial services industry in London will be a dominant financial services industry, but I do think it will be smaller. I think the biggest beneficiary of that financial center is not Paris or Dublin. I actually think it's New York. I think the big U.S. firms that are doing much better than the European firms are going to be more and more reluctant to put people in London when they could be in New York. And I think there'll be far few people outside of London in some of the smaller regions. So it's having an impact. I think the UK has a very, very strong economy, and I think they'll be fine. I think the challenge is more for Europe than it is for the UK.
One of the concerns has been the sort of stability, the health of the financial system. We haven't seen a tremendous amount of evidence that it's really taken its toll, and it doesn't sound like you think things are going to unwind over this in any way a la 2008. I mean, there were a lot of doomsdayers out there that were very concerned that this would really spell trouble. You don't see that coming? Not
at all. I don't think from a solvency point of view or any of that, I think there's any issue. I do think that Europe is still in a very fragile position.
Well, I want to talk about Europe because let's talk about Atlas and what you're doing now with the merchant bank. You've had a lot of investments in Africa, but you're putting a lot of money into Europe right now, even with the uncertainty. So what are you doing? Where are you investing?
So there's a couple of themes, Gary, and we're all financial services. We're very focused on the developed economies right now, and we see a couple of themes that the other thing I would say as a merchant bank is we like to have stakes that are substantive, even sometimes majority, so that we're able to be a part of management and driving growth. So we're very, very actively involved. One of the themes is the broker-dealer. And I think the bank holding company is the wrong model to be holding a broker-dealer today, and that was not the case before the crisis. It's all the issues around the supplemental levels of capital that are necessary, but also the supplemental leverage rule. So with a 5% leverage rule is a large U.S. Treasury business or derivative business or foreign exchange business best housed in a bank holding company where the regulators would prefer not to see that kind of risk, or in a broker-dealer regulated by the SEC. So we've invested twice in South Street Securities, which is a large, very successful standalone repo business, and we have 3 or 4 other opportunities that we're looking at right now. And I think this theme of the flow businesses or the broker-dealer businesses coming out of bank holding companies into banks is real. The other theme is where, you know, for 20 or 30 years it's been global, global, global. It's now regional, regional, regional. And where it's been universal, 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 now it's about focus and selectivity. And when we look across Europe, we're looking very actively at both the asset management businesses and the banks, but within countries, as opposed to those that are trying to have platforms across Europe. Until they resolve the non-perform loan on the Italian banks and some of the other banks, you're not going to see real investment. But I think we're very close to capitulation on that. And I think the support of Governor Draghi is important here.
It's very interesting what you're saying about the locality, just everything going local as opposed to being global. And that's a trend in a very different direction. We saw that obviously through Brexit. We see it through what's happening in the U.S. right now. And the anticipation is that it's going to happen more so through Europe. What does that do, in your view, to overall global growth? I mean, is there a chance that the world is going to grow less as a result of this focus inward, or might it just all be okay?
Well, you know, I always like to go to a real example, and what's the math? And, you know, I look at the challenge that Jess Staley, the CEO of Barclays, has with his decision about a year ago to exit Africa. And as he explained, but the penny hasn't dropped for a lot of people. The math he's facing is very simple. The business that they own over 50% of has a 17% return on equity. It's the best bank across Africa. When it gets to the parent, to Barclays, it's 8%. Because the UK taxes them on their global balance sheet, so even deposits in Africa, because the SIFI and GSIFI charges can't be allocated to a subsidiary, and because the regulators charge them 100% capital for a 50 or 60% equity ownership. For the last 20 or 30 years, being global meant we had capital synergies, product synergies, client synergies. Today we have capital dyssynergies. So the global business model is no longer the best for owning a regional bank in the Middle East or in Africa or in Europe. And I think that's a big change, Trish. And I do think that's going to have knock-on implications.
In that it will hinder growth worldwide?
Well, I think if you can look at it either of two ways. If it gives an opportunity for the local and regional banks to be much stronger, it can foster growth within many of the regions.
What I hear Bob saying is if you can identify within the specific countries the asset managers or the broker-dealers who are going to benefit by being homegrown.
There's huge growth.
That's where you're going to get the growth.
Exactly right.
All
right.
Good stuff. Bob, good to see you. Thank you so much.
Thank you.